There is a beauty and clarity that comes from simplicity that we sometimes do not appreciate in our thirst for intricate solutions. Dieter F. Uchtdorf. And what Dieter is telling us is human nature. We seem to want to make things more complicated than they need to be. And I want to urge you, if you're interested in learning to chart the markets, if you're interested in learning what we teach here, technical analysis, keep it simple and straightforward. Remember that acronym KISS. Also heard when I was in the Marines, keep it simple, stupid. But we'll just say, keep it simple and straightforward. Focus on things that work. Do not make things needlessly complicated. Occam's razor, that is the theory put forward by John of Occam, a Franciscan friar, I believe, from England. Back in the, I believe it was in medieval ages. It's been a while since I did that video for you guys. In fact, I'll put it at the end of today's video. You'll see it at the end of today's YouTube video. What about Occam's razor and what it teaches us. And it teaches us that the most simple solution is always the best. The more you complicate things, the more they won't work, the more they will not work. So we keep things simple. Our main indicator is the price percent oscillator, and our main function of what we do here is look for weekly vertical crossovers. Why? Because they show us sea changes in investor sentiment, going down, as we saw with the COVID crash, or going up after the market started to recover. The bigger the wave also, that's why weekly vertical crossovers, we peg on those over and over and over again, because the bigger the wave, the more energy, the more likely it is to keep moving in the direction of the crossover. We have a great training for you today. It is using indicators to interpret crowd sentiment, just what I'm talking about, and it explains why we use the price percent oscillator and how we use it with the derivative oscillator, with our Bollinger Bands, with our trend lines, with different time periods, the weekly chart, the 2-day chart, and the half-day chart. Now, in order to get all that training, just go to chartingwealth.com and sign up for our daily reviews. You can subscribe for free. We don't ever spam that list. We never sell that list. That is for you to get the materials from us. The daily reviews, the once-a-week weekly review and forecast, and the special trainings along with that. Links to all sorts of things, including our daily market worksheet, weekly market worksheet, and trade worksheets, PDFs, where you can print those off and supercharge your training. For those of you who were with us yesterday, if you didn't get this or you missed yesterday's program, at the end of the video, we also give you links on how to use the daily market, weekly market, and trade worksheets, how to fill them out, which you need to do every day. The daily market worksheet, the trade worksheets when you're doing practice trades, and of course, the weekly market worksheet once a week. What do we see going on in the markets today? We see the S&P down 0.88%, the Nasdaq 100 way down 1.56%. We see 20-year bonds up a little bit. We see gold down, moving in the direction of that most recent weekly vertical crossover. Let's start as we always do with the S&P 500. What do we see going on? We see a green, solid green spinning top. That means indecision tending down. It is not an open box candle. It is a slowdown in that strong down movement from the prior week, but still down. We see the price percent oscillator heading down, derivative oscillator heading down. Go to that 2-day chart. We can see things still moving down. We can see that this latest candle that is forming, this will finish forming on Friday. It's a 2-day candle. It is a red down candle after a prior up candle. Things have really slowed down. Look at that price percent oscillator, derivative oscillator gaining downward momentum. Go to the half-day chart. Strong down movement in the morning, slowed up in the afternoon, crossed over, going down in the morning. So we will redraw our half day, what we used to call the 4-hour. It never was a 4-hour candle, but most of us think of a day being 8 hours. Market is not open that long. As you guys know, it opens at 9:30, closes at 4. So it's 195 minutes long. And we see that candle, those two candles showing us down movement. That's where we are on the S&P, not crossing over, not likely to cross over by the end of the day on Friday, but boom, what do we see happening here? And in fact, I'm going to make a note to myself. I promised to do this for you guys before. All of you who are subscribers to our texting service, I'm going to be sending out tonight a warning for you to watch QQQ for a down practice trade with a possible weekly vertical crossover on Friday. See what's happening? Got one more day of this candle, and I'm going to make sure to send that out on our texting service. If you're not a subscriber to the texting service, this is all you have to do. Now, again, it only works in the States. We don't have a texting service that works overseas. I'm sorry, but you'll learn this every Thursday and Friday. We will tell you nonetheless. But if you want to sign up for that texting service, you're in the States, text the words Charting Wealth. That's actually just one big word, Charting Wealth. Run it together to the number 33222. You will then be signed up for our texting service, and you will learn whenever there's a weekly vertical crossover, and we're going to start including 2-day recrosses in that mix also. That ends up being one, maybe on a good month, maybe three texts. So again, we're not going to blow your phone out or anything. And again, sign up for that. It is free. Our Patreon members, their support helps pay for that service. Please thank them. If you want to become a Patreon member, great. Follow the link in the show notes. So look at the cues. We see the price percent oscillator going negative, trying to do so. We have a solid green down candle. When I say down candle, it's a slowdown from that movement the prior week. Up candles are either open box green or red. The converse of the solid green candle is the open box red candle. This solid green candle has a little wick on the top, a wick on the bottom going lower than the prior week. And again, we'll continue to watch this and see how it develops, but we may very well have a weekly vertical crossover at the close of the market on Friday. That means your buying point is around 350 in the afternoon for your practice trade on Friday, all things being perfect in the setup if it continues to go down. We look at the latest 2-day candle, red down candle moving down, price percent oscillator accelerating a little bit in its down movement, derivative oscillator gaining downward momentum. We look at the half-day chart down in the morning, slow down in that movement in the afternoon. We did have a crossover on that smallest of charts, which means it means the least, but we'll go ahead and chart that on there. So that is good to see. We'll continue to watch and see what happens. What happens if tomorrow's an up day? Then, of course, pay attention. Use all the charts all the time. I want you to practice trade this. If we do have a weekly vertical crossover and it looks like something you want to jump into on a practice trade, either looking at puts, and we know how to do that. Remember, you're going to print out your options worksheet, and you're going to look at both in the money and out of the money options 5 months out in time. Again, we're going to track that. You want to make sure you track that on your trade worksheet if you're going to do an option, or you can always look at an inverse fund. Another thing for you to practice, PSQ, is the simple inverse. And of course, if there is a weekly vertical crossover, one would hope that it moves up. It's been moving down as QQQ has been moving up. It is a single inverse. Again, I want you to practice trade that. Look at how your profits go so you can understand the fees that are charged, how these things can reset on a daily basis, and how they work. You're only going to learn what we teach here by doing, and that is by practice trading. Now, that's what we see potentially setting up. Again, we'll continue to watch, see how things go on Friday, and again, be looking to potentially jump into a practice trade around 350 at the end of the day. If there's a huge up day tomorrow, then it may very well pull this back through or weaken it significantly, and it won't be a crossover. So we'll wait, we'll see, we'll watch it, but tune in toward the end of the day and see what there is to see, what there is to learn, and make sure to print out and use your trade worksheet if you jump into that practice trade. Let's look at 20-year bonds. What are they doing? They're going pretty well flat. You can see going to the second week of a doji almost. Now we see the price percent oscillator still negative, and it's moving down. Derivative oscillator gaining a little bit of downward momentum. 2-day chart, again, moving closer to crossing over, going up. It is still negative. This latest candle is a green up candle. Little wick on the bottom, tall wick on top. So we'll continue to watch, see what there is to see there. Look at the half-day chart. What do we see going on the half-day chart? It just won't cross over going down, will it? Now, if it crosses over strong going down tomorrow, it was an up day on Thursday, you could have a 4-hour crossover going down. The 2-day and the weekly, even though that 2 days awfully weak, you could potentially have a jumping in point for a down move. I wouldn't feel super good about it, but it's possible. So again, look at it. If you want to practice, trade it, and learn what there is to learn about TLT, by all means, my friends, I encourage you to practice. Now, lastly, we're going to go to gold. Gold down for the day 0.55%. We have a little green spinning top. That is an open box spinning top. Price percent oscillator is trying to pull away from the red signal line. Derivative oscillator going into its second week of down movement. Now again, we had that weekly vertical crossover. We go from the weekly to the 2-day. 2-day is still trying to move down. Derivative oscillator losing downward momentum. We do have a red candle forming finally after 6 days of up movement. We'll see what gold does on Friday. We'll see what it does for us or against us, and we'll keep watching this trade. Remember, your parameters for your profit and loss bands should be there, ready to be executed if this does not go your way on the short trade. Lastly, we look at the half-day chart. What do we see there? Really strong down in the morning, bit of a pullback in the afternoon. Didn't have a crossover. If it would have continued on, of course, you would have gotten one at the end of the day on that 4-hour chart. But it'd be nice to see that hammer down in the morning, wouldn't it? And go in the direction of the weekly and make that 2-day stronger going down. But we don't know if that's going to happen. We'll wait and see. We'll let the charts lead us. Folks, that's where we are. In particular, pay attention to the cues for a potential weekly vertical crossover at the close of the market on Friday. God bless, my friends. All the best from the whole team at Charting Wealth World headquarters. If you don't have our book, follow the link in the show notes to buy it. Charting Your Way to Wealth. We appreciate your support.